Hey everybody, this is Peter here at H&M Realty. I wanted to chat a little bit about some loan programs. It's kind of changed a little bit. I know I mentioned that lenders and everybody kind of tightened up with COVID-19 happening, but there's some different loans that people really took and a lot of people usually use to help them with down payment assistance. One is CalHfa. That's a big program. I work with some lenders that provide that to people. And you can't get these at big banks like B of A or Chase or Wells Fargo. They're just normal brokers, and what CalHfa is basically like, if you've heard of FHA, and I've talked about it before, CalHfa basically is it's along with FHA, but they provide you with a lot of the down payment for that property. So ultimately, they don't have to bring a lot of money to the table to purchase that property. However, depending on who you are, what your occupation is, and some other factors, that might be a second loan on the house that's a silent, or it may be just down payment assistance and that second loan goes away right after you guys purchase it, or maybe it goes away after 3 years, just depending on how much they give you and what your occupation is, what your finances are, and stuff like that. So what CalHfa does is they'll give you, which they stopped the loan program once COVID came into play, and then after a while they picked it back up, and what they did is they provided basically $7,000 of down payment assistance, and that's currently still what it is. It used to be about $10,000 and a little bit more, just depending on who you were, what your income was, and the status of your job and everything like that, and what your interest rate was, and also your credit score. So that all those factors played into them giving you $10,000 or more on your down payment. You're still going to have to potentially pay closing costs depending on if the seller is going to do that for you or not. You can definitely ask them for that, but that's what CalHfa does. So they allow for people that can't save as much, even if they have 2 jobs. They can't save as much as quickly. So ultimately, they're able to provide that. There's some other criterias like their interest rate is most likely a little bit, or their credit score is a little bit lower than maybe someone that's going to do a conventional loan. But they still have parameters where you can't be under a specific amount on that credit score. So those are things to think about too, especially when you're helping clients. Also, even though big banks don't provide CalHfa, they do provide some down payment assistance on some programs. Depends on how much you make, what the area is, all those factors go into it too. So those basically, those banks, like for instance, B of A has one where some areas it's $7,000, and then some areas it's $10,000. And then sometimes, depending on really where you're looking, and then also what your occupation is and how much you're making, sometimes you can combine those too. So you're having basically up to $17,000 that's going to cover closing costs and some, down payment assistance too, which is huge, especially for people that are first-time home buyers and they just can't make up, especially in California where we're at. They can't make up that down payment because sometimes they're buying a house that's $400,000 and they're doing an FHA loan. On top of that, they're getting some down payment assistance because they've only saved X amount over the course of maybe 5, 6, 7 years. So a couple of programs to look into, especially if you're working with clients that need down payment assistance or yourself need down payment assistance. There are loans for you, and that will be able to help you throughout the process of escrow to buy that home. So talk to your lender or your real estate agent, and have your real estate agent provide those lenders that can give you, access to those federal grants and also loans or those big banks. All right, thanks for watching.